I made a lot of blunders when I first started investing. I purchased equities based only on their popularity, became alarmed when prices fell, and even sold profitable stocks too soon. What I now know, I wish I had known then. I'll go over 10 key things I've discovered about stock market investing in this video. You may avoid stress and save time and money by following these guidelines. Additionally, if you stick with me through to the finish, I'll share with you the worst mistake I made that cost me thousands of dollars, as well as how you can prevent it from happening to you. I thought I needed a lot of money to start investing, like thousands of dollars. But the truth is, you can start with as little as $50 or even $10 because of fractional shares. Starting early is important because it gives your money more time to grow over the years through compound interest. When I was in my late 20s, I kept thinking I didn't have enough money to invest, so I put it off. Then I met a friend who started investing just $100 a month in his early 20s. By the time I finally started, he had nearly doubled what I had been able to save. It was a real eye-opener. The lesson here is simple. Start small, but start now. Compounding is like magic, but it takes time and patience. Here's how it works. Your money earns returns, and then those returns start earning even more returns. Over time, small investments can turn into much bigger ones, all because of this powerful snowball effect. Example. Let's say you invest $1,000 with a 10% return each year. After 1 year, you'd have $1,100. But in the second year, you earn 10% on the $1,100, not just the original $1,000. Over 20 or 30 years, this growth really adds up and turns into a much bigger amount, all thanks to compounding. One of my biggest mistakes was trying to guess when the market would go up or down. I thought I could predict it, but it just didn't work out the way I hoped. I remember selling my stocks when the market dropped, thinking I was being smart by avoiding more losses. But just a week later, the market bounced back, and I missed out on big gains. Now I stick to a simple rule. Staying invested in the market is better than trying to predict its ups and downs. It's easy to want to buy a stock just because it's trending or because a friend recommended it. But investing without doing your homework is like driving with a blindfold on. It's dangerous and risky. Example. One time, I bought a stock just because I saw a tweet about it. A month later, the stock had dropped by 30%. It turned out the company had bad financials, but I didn't check before investing. That taught me an important lesson. Always research the company before you put your money in. You've probably heard the phrase, "Don't put all your eggs in one basket." That's what diversification means, spreading your money across different industries, sectors, and types of investments to reduce risk. This way, if one investment doesn't do well, the others can help balance it out. When I first started investing, I put all my money into tech stocks because they were doing well. But when the market dropped, I lost a lot. If I had invested in other areas like healthcare or energy, I wouldn't have lost so much. Financial news can be really overwhelming. The markets are always going up and down, and every headline feels urgent. But for long-term investors, most of it doesn't really matter. Focus on your goals and ignore the short-term noise. It's the long-term growth that counts. Advice: stick to your plan. Don't let fear or excitement from the media make you change your decisions. Stay focused on your long-term goals and trust your strategy. Investing isn't a sure way to make money. The market has its ups and downs, so you need to be ready for losses, especially in the short run. A friend of mine used his emergency fund to invest when the market was going up. When it dropped, he got scared and sold at a loss because he needed the money for car repairs. So the lesson here is, only invest money you won't need in the near future. Fear and greed are the two biggest enemies of investors. Fear makes you sell when prices drop, and greed makes you buy risky stocks when they're at their highest. Example. During my first market drop, I panicked and sold most of my investments. If I had just stayed calm, I would have gotten all my money back in a few months. Now I stick to a plan and avoid making decisions based on emotions. Fees might look small at first, but they can add up and take away from your profits over time. Whether it's brokerage fees, mutual fund charges, or hidden costs, it's important to know exactly what you're paying. Even small fees can make a big difference in how much you earn in the long run. Advice: choose brokers with low fees and index funds that have low expense ratios. Even a small difference of just 1% in fees can cost you thousands of dollars over 20 years. The stock market is a game that takes time. It's not about making a lot of money quickly. It's about growing your wealth little by little over time. Instead of trying to get rich fast, the goal is to invest wisely and let your money grow steadily. In the long run, patience and consistency can lead to greater financial success. I once sold a stock after owning it for just a year because it hadn't increased much in value. But 3 years later, that same stock had tripled in price. If I had been more patient and held on to it longer, I could have made a lot more money. This taught me an important lesson about the value of patience in investing. Sometimes sticking with your investments for the long term can lead to bigger rewards. So these were the 10 things I wish I had known before jumping into the stock market. Now let's rewind to the biggest mistake I mentioned at the start of the video. It's time to break it down. I invested in stocks that paid me quarterly dividends. I didn't reinvest my dividends early on. Dividends are like free money that your stocks pay you for holding them. Instead of using that money to buy more stocks, I spent it. If I had reinvested those dividends, my wealth would have grown much faster over time. Now I put every dividend I earn back into my investments, and it's really helped my portfolio grow. If you found these lessons helpful, make sure to like this video, subscribe, and share it with someone who's thinking about investing. What's one lesson you've learned about investing? Drop it in the comments below. I'd love to hear your stories. Thanks for watching, and I'll see you in the next video.